Like most companies, of course, you tempered your forecast for the year. Given the current environment we are, with unemployment claims piling up, more furloughs coming down the pipe from a variety of companies, your company, I would assume, has a pretty good eye on what's happening in the labor market right now. What exactly are you seeing in your business?
Well, first of all, thanks for having me on. We do have quite a window into the labor markets. We have over 800,000 clients, 750,000 or so small business, and about 100,000 that are kind of mid-size and larger, including we have some international clients as well. So we have a pretty good view of what's happening in the U.S. and also globally. And what we saw is, as you mentioned yesterday, we had our earnings call, and we had a great quarter that ended March 31st, but the last 2 weeks of March, we really started to see some of the negative impacts. So despite the fact that we were able to deliver good results for that quarter, some of that was obviously just backward-looking. And then towards the end of March, we saw a very steep and abrupt drop in the number of people paid at our clients and the balances that we handle for our clients as they pay their employees and also pay taxes. So we are obviously a reflection, given how many people we pay in the United States, which is 26 million, and we also pay 40 million globally. We're a reflection of what's happening to the labor market, so we're certainly not immune.
So what does your data show for this month so far, for April? And what do you think the bottoming process will look like in this cycle versus what it typically does in a downturn?
Well, it's a great question because, you know, we have begun to see some things that may show some signs of stabilization. But, you know, the caution here, your question about trying to compare this to kind of prior downturns, it's very hard to do, as I'm sure a lot of folks you've talked to are saying the same thing. Like, we've never seen anything like this in terms of the steepness or the speed of the drop. But our kind of what we call pays per control, the number of people paid by our clients, we track that weekly, and it gives us a more real-time set of information than maybe other people have. By the way, we share that information with various parts of the government and policymakers so that they can use that information. They've asked us for that information because it's a little faster than the typical monthly data. And that information, unfortunately, through April, reflected what you're seeing in the initial unemployment claims, which is some really bad numbers in the first several weeks of April. What we did see, though, towards the end of April is not necessarily in the number of people paid at our clients, but in the number of job postings and also screenings. And screenings are really background checks. So when someone hires someone, they have to give them a background check. And job postings are obviously a very leading indicator because you first have to put a job posting out there to then go out and recruit people. So that did flatten out towards the third week of April. So it appears that people may be already looking forward to a potential reopening of certain states or certain industries and thinking about the fact that they're going to need to have people on board, and job postings would be the first leading indicator of that.
So, Carlos, I want to talk a little more specifically, though, about your business. You had laid out at one point a full year 2020 forecast to improve margins by about 500 basis points. Is that target still achievable in your mind, given the current issues we're going through in the economy?
Well, so we had to revise our guidance like a lot of companies did. We chose to actually revise our guidance rather than just withdraw it completely because we have a fair amount of visibility into our business, given that it's recurring revenue. So we retain approximately 90% of our clients and 90% of our revenues in any one year. Obviously, in these kind of challenging situations, those numbers could vary, but it's a very predictable, highly resilient business model. So, but as I mentioned, we're not immune. So as an example, just the drop in the number of employees paid at our client sites is about a $200 million decrease in revenue for us just in the fourth quarter. We also had an impact to the balances that we handle for our clients, which translates into lower what we call client fund interest. So this is interest on the funds that we hold on behalf of our clients and for the tax authorities. And so there are a number of factors, I think, that went into our revised guidance. But, you know, given, fortunately, the visibility that we have into our business model, we were able to give, I think, stakeholders a reasonable sense of where we expected to end the year, which for us, our fiscal year ends June 30th.
All right,
Yeah.
Carlos, we managed to get through this entire conversation without mentioning Bill Ackman, but I did want to bring it up because it's been more than half a year since he exited his position in ADP after a 2-year effort to take over the company. How did ADP's experience with Ackman change your multi-year strategy? What did you learn from that proxy battle?
Well, we had a constructive, I think, relationship with Bill post the proxy contest, which I think was the right thing for both of us to do. And you probably saw some of the actions that we took in terms of modifying some of our disclosures. We, accelerated, I think, the pace of some of our transformation efforts that we had underway for a few years. As I've said before, I think there was probably some lack of communication prior to the proxy contest, but I think once we sat down and started talking about things, I think we came to a lot of common ground. And I think that based on what I understand from Bill's returns, I think ADP probably contributed in a pretty handsome way to the returns that he and his investors, I think, experienced in his funds. So I think he's now moved on to other investments, and we certainly wish him well. But our business and our strategy, clearly we listen to all shareholders, including Pershing Square. But we had a strategy and a transformation effort that was really underway prior to the proxy contest, and we continued to execute on that. And in this third quarter release that we did yesterday, I think people saw some of the outcomes of that. Our client retention, which is kind of a measure of the health of the business, was up in a very significant way and ahead of everybody's expectations. So I think the transformation efforts have borne fruit for us, and it's been I think great to see the company improve in so many different ways. And unfortunately, now we have this challenge that we have to deal with going forward.